Hello, I'm Marcus Brix with the CattleFax Closing Bell, brought to you by Zoetis. So far in the month of March, WTI crude oil prices have been down and out. Between March 1st and March 14th, spot futures prices fell from $53.83 per barrel down to $47.72. Daily prices on March 22nd have tested the most recent March lows at prices not previously seen since before the November 30th rally. The November rally was sparked by OPEC negotiations for coordinated oil output cuts in the first half of 2016. OPEC member countries agreed to collectively cut 1.2 million barrels per day of crude production, with several major non-OPEC countries agreeing to reduce as well. While February OPEC production shows the cuts have made progress to reduce daily production rates to the 32 million barrel per day target, markets remain oversupplied. Although OPEC production figures have dropped by 735,000 barrels per day since October 2016, the United States has added 679,000 barrels per day back in. By increasing investment in crude oil exploration and drilling, the U.S. has increased daily crude oil production to 9.129 million barrels per day. This is the highest daily production rate since February 2016, when the crude oil market was finding its lowest prices in a decade. Domestic crude oil stocks have been record large for 3 years now, with over 533 million barrels in storage as of the latest EIA petroleum supply report. The combination of increasing U.S. production and overwhelming volumes of supply has caused concern for crude oil traders. There's growing market sentiment that the OPEC production cuts have been less than effective, and that they may not be extended past their June expiration. Data from the Commodity Futures Trading Commission highlights the speculative pressure commodity traders have applied to the crude market. The non-commercial trader, defined by the CFTC, is a segment of the market without interest in the physical commodity. These non-commercials can help move a market by providing liquidity, as well as providing investment money in the form of long-sided trades. Following the November 30th OPEC cuts, non-commercial net length in crude skyrocketed to record high levels. Non-commercial net length as a percent of total crude oil open interest reached 26% on February 21st, the second highest in history. In the month of March, non-commercials have reversed course, removing nearly 125,000 net longs. Non-commercial net length as a percent of crude oil open interest was back down to 19% through last Tuesday's data, much closer to the 3-year average of 18%. Thanks for watching. Remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.CattleFax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.